support at 1707, 42.99, 91, 79. Resistance on the upside at 41, 49, 61, 72, and 80. Pivot 28, support 1707, 42.99, 91, and 79. Resistance on the upside at 41, 49, 61, 72, and 80. All right, welcome to some of the new folks that are here. We are trading mini S&Ps, looking for opportunities to scalp the market based on the levels we just gave out, in addition to price action opportunities that might occur once the market paints some bars. Combination of both those gives us our opportunities to scalp the market. Again, we're looking with the volatility these days, probably 5 points is probably a good starting point for us at this point right now. And we'll see what the day brings. The market is trading on the heels of the President's State of the Union address yesterday, and obviously focused in on a lot of economic stuff and Russia situation. So we'll see where that brings us today. The market seems to like what it heard. Not too bad, at least anyway. So we'll see what today brings. But things have slowed down a little bit. The volatility has calmed down just a touch. That's why we probably are looking more at 5 points here with on the understanding that on Friday is going to be unemployment day. Always the market's looking out for that. And the number that I hear for non-farm payrolls is up 325. That number has been fluctuating all over the place. Bond market here retreating here a little bit after its some ridiculous gains here over the last few days in regards to what's going on with the war there and flight to quality situation that's been occurring here. Yield is around one. It's up a little bit more even now, but from this morning it was a 170 on the 10-year. So let's see what that brings. Powell is going to be testifying today in front of the semi-annual monetary policy report. He's doing that at 9 o'clock. So right at the top of the hour here, he's Powell's going to be testifying, I think, for the committee. The Fed governor will walk a tightrope over the next couple of days, addressing separate House and Senate panels as part of the biannual hearings on monetary policy. The testimony before Congress will likely be his first public remarks before the FOMC embarks on rate hike cycles, with inflation running at the highest level since the 1980s. Powell will emphasize his commitment to taming the price pressures while being mindful of economic growth, as the market here just kind of gyrates here a little bit. Mindful of economic growth, but geopolitical tensions surrounding Russia and Ukraine. Not very easy for them to kind of maneuver. I've been talking about that for a while. Could we repeat the levels in the chat if that's possible? If not, I'll repeat them again. There they are. Just ask and you shall receive. Lawmakers will, meanwhile, question the Fed's balance sheet, global dollar demand, as well as labor supply bottlenecks and financial conditions and stability. Basically telling you, do not trade during this moment of a lot of craziness that they're going to be asked, especially Powell, and especially televised. And everybody's going to assume one thing or another. So this is quasi F day. We definitely don't like to trade any F days, which stands for Fed, because I do get F'd on F days, and this is your Awesome F day. So you're going to get some volatility here. Again, we've been talking about three things that you can do with the trade. You could make money, lose money, and you could also scratch. Well, another thing you can do with the trade is not to trade. The VIX is at 33. Kind of a little surprised at that, I guess, because we kind of went down here yesterday a little bit. Thought it would be a recovery here after this rally. It must have been a lot higher with this break on yesterday afternoon. A little bit careful there in regards to trading, especially with the Fed, Powell going to be talking. And not only is he going to be talking and giving his statement, which is probably out already, answering questions, and that becomes the unknown as to how he's going to answer a question. If he pauses in the wrong part of his sentence, it could create some volatility. If he sneezes at a moment when he shouldn't be sneezing, it's going to create some volatility. So all of these things you have to take into consideration when you know that he's going to be talking. And again, we don't like when Fed releases the results of interest rate hikes, because their statement is dived into word for word, comma for comma, and everybody can assume what they want to assume from those statements. And this is going to be even one more added statements, as he's going to be obviously talking about it. So be careful there when he starts talking, and it's going to be, and it's not the talking. His statement is already out, probably, so it's probably going to be the question and answer situation that goes on all morning. So be careful. Up until last week ago, markets were pricing in a 25% hike at each of the FOMC 7 remaining meetings in 22. There would even be expectation for a stronger move this month, with some forecasting a 50% increase in the March 15th to 16th gathering. However, once the crisis in Ukraine erupted, investors dialed back those beliefs and are now seeing around 5 rate hikes this year to bring the Fed's funds rates in the range of 1.25% to 1.5%, according to the CME data. There was as of February 10th, which was about 3 weeks ago, the market was pricing in a 50% basis point increase in this March meeting. Right now, the 50% basis point move is basically out, and there's 100% chance that they're going to do a quarter for sure. That was always the case. It was were they going to be very aggressive and do 50? So because of the geopolitical situation, and I look, they could still do 50. I mean, just because the market is not pricing in 50 doesn't mean it's going to not happen. And this is where the volatility comes in. And so as you can tell here, the market's really kind of dead, and I'm talking a lot more than talking about the trade. So we have to be patient and wait for opportunities, like I always say. All right. So that's what we try to do here. But we are patient. We try to be anyway. So that's what is happening with the Fed. Powell has to thread a pretty thin needle. The balancing act is going to be difficult, to explain some analyst from Moody's. My sense is he leads with the uncertainty that this all created, given the Russian invasion, and could take many different paths, each one darker than the other. He'll reinforce the point that in a period of such heightened uncertainty, it might make sense for the Fed to be a little bit more cautious in enacting policy. That might be or might not be a good statement for the market, right? I mean, as we have resistance up here at the 41 area, market upticks here a little bit. Okay. All right, so we'll see. We'll see what happens. The volatility is still in the market, as you could tell. It's the ladder ticket is There's no 100 lots up and down the ladder ticket, not initially anyway. All right, we kind of drifted up to 36.7 area there and came flying off. See what that's going to do to them. Again, we're looking at 41 as our next level of resistance. Pivot there at 28. It seems to be bouncing off of that here a little bit. Oil prices ascend to showing ascent is showing no signs of slowing down ahead of the most important OPEC meeting since the beginning of the pandemic. WTI climbed 6% overnight to 110 a barrel, and that was despite the U.S. and other members of the IEA agreeing to release 60 million barrels from the Strategic Petroleum Reserve and other emergency stocks. The coordinated drawdown would be only the fourth in the agency's history, sending a unified and strong message to global oil markets that there will be no shortfall in supplies as a result of the Russian invasion of Ukraine. Although the sanctions are still being crafted to avoid energy price shock, we believe this aggressive but not maximalist stance may not be sustainable with the distribution to oil and gas shipments looking increasingly inevitable. We're coming up here to the 41 area. See what it wants to do up here. Okay, work in this 41 area here a little bit. Again, either way, you keep your stops in place, right? I always talk about that. Where the market takes us every time, we are just finding these areas to be able to help us find opportunities to scalp. Sometimes they work out perfectly. We had a few of those yesterday that didn't give us too much issue and rotated very nicely. This one we have to work a little bit. Again, you have choices here. Like I said yesterday, as to lightening the load a little bit if you don't like the price action, keeping your stops in place, and making sure you always keep your stops in place. So we always talk about that. All right, getting a little bit of rotation here off of our 41. Just trying anyway. Price action, a little bit of a profit. You don't have to wait for the 5 points, especially since the market's giving you a choice here. Sometimes it doesn't give you a choice. So it's giving you choices. And again, how you manage those trades is totally up to each individual trader. There's not one perfect way to doing this. Obviously, the risk tolerances come into play in regards to the individual trader and how many contracts you trade and what your goals are every day. Everybody's got different parameters that they have to consider. And consequently, that's a visualized situation. All I can do is suggest things and explain risk. And once you understand the risk, then you have to make that determination on your own as to how you're going to manage that risk. Right. As we continue to uptick here, next level up here we have is up to 49. Remember, I suggested you get out of some, maybe cancel some trades, get out of a couple of those. We come up here to the 49 area right now. We'll work in that area now. Yeah, we're just getting a little bit of a opportunity to trade right before, his talking, right, which is very important, especially because we don't like to be trading when he's going to be trading away, and that's going to be happening today for sure. And look, they might like what's going on here. They might like his comments, and this is why you're getting this kind of F trade situation happening right now. Right? They do have his statements that are released prior to his giving it. Opening statement anyway. And the market here is reacting. Could be reacting to that, or just kind of happy that maybe the situation in Ukraine's better. You never know what the market is thinking. That's why you always got. And you can always tell by us our trading methodology here that when to. If you don't like the price action, it kind of gives you an idea that maybe you should lighten the load, take a smaller profit. All of these are options that you have as a trader, right? There's not, you don't have to say, oh, I have to take, X amount of money out of this trade because I have to, right? And we're getting a nice rotation here against our 49 area, got up to 50.75 there and came off. So hopefully somebody will get in at 49. Oh, yeah, he's definitely going to be raising rates. The question is at what pace, how fast, how much is he concerned about all these other things that worried about. So a nice rotation here against our 49 area. If he scaled in there, maybe he got in a little bit higher, giving us our 4 points right now. Let's see if we can get a little. Well, you definitely got more than 4 points on the upper end of the range there. Hopefully, we're able to take that profit. Again, if you have multiple contracts, you're scaling out of some, taking profits. You're not going to just it all depends how you trade. And yesterday we talked about if you had some nice opportunity there to be able to sit with a couple contracts, you had a nice little trade there where you could have made a lot of money on just a short amount. Here's our 5-point rotation against our 49 area. I kind of talked you out of exiting some of those at 41 because of the price action. Once we got up to 48.5, we rotated up and got our upper entry point there, and then I had a nice rotation here off of that. So maybe some of you were able to get in, get out, get in again, and take advantage of the 49 area as well. So yeah, so he's going to be talking. That's major news. That's going to be starting about again, his statement is going to start. Statement's already out, so his opening remarks, I should say, are already out. So we'll see what happens after that. Again, we don't like to trade when F stuff is going around. So just, again, we're trying to minimize as much as possible volatility and uncertainty, right? And risk. Obviously, if you know that there's going to be something that's going to be affecting the market in one way or the other, and it's going to create some volatility, and you want to minimize your risk, you have to just not trade, right? I mean, just not trade. All right, so nice rotation here off of the 49 resistance. If you want to stay short, you could try to do that. And again, you're staying short with a small amount. The Fed, Powell's going to be talking momentarily. All right. Again, if you're trying to stay short with a few contracts, then it's good. If not, that's fine. You took your profits, it's all right. Look for the next opportunity. Right now, we have support down at the 22 area. Again, if anybody has any questions, any comments, anything you want to add to this, want to know any question, if you have any thoughts or ideas, please put it in the chat. We have the chat window up, so I'll be able to see it and answer any questions that you might have. All right, market here kind of, if you have any left over, I would say, again, you could leave your stop at break even for any contracts that you have might left over. If not, then it's okay. We'll look for your next opportunity. So here's an example of how you can take a little bit more than to 5 points, depending on the moment and time that we're at. I mean, volatility changes as the market here turns over a little bit, giving us a nice opportunity to make a little bit more than just the minimum that we're looking for. And again, you don't need too many contracts to be able to, take advantage of this rotation. And we don't know when they're going to show up. And that's why we keep our stops in place, and that's why you take profits along the way. And also, if the market does go your way, you can put your stop in at an appropriate place and just kind of let the market do its thing. And you can have a trailing stop right now with this, or you can just cover them. If we get down to the pivot area, that'd be nice. We have 22 as good support. I don't know if that'll get down there or not, but it's a way of being able to maximize the area and the levels that we talk about. Yeah, if anybody has any questions, feel free to ask in the chat. So Paul's going to start his testimony about at the top of the hour here in a couple of minutes. So again, initially it's going to be his opening statement, followed by the Q&A, and the Q&A is the part that we have to be concerned about in regards to volatility. All right. Next level of resistance we have up here is the 80 area. I'm sorry, 61. Skipped over. I was looking to see what we have here above 80, and I said 80. 61. Sorry about that. All right, maybe you covered and you're flat now. And we'll see what happens next. Remember, now he starts his conversation with the Senate, and I would be very careful here about trading because you never know when they're going to add some volatility to market. because of what he says or doesn't say. All right, we're back here at the highs, and now we're going to see if we want to uptick here to the 61. I mean, maybe they're a bit more confident here with the situation in Russia. I don't know. Our next level resistance up at the 61 area. Again, any levels that we talk about, any concepts or ideas, any levels that we support levels or resistance areas or price action opportunities, we teach in our education course. And that gives us the goal of our education course is for you to be able to find these areas on your own, to be able to manage the risk independently of myself, and to be able to trade them on an independent basis. We have this trading room here to kind of, keep you a little entertained and kind of stay focused on the market instead of just kind of, sometimes it gets very quiet out there, and especially when I was up in my office and when I got off the floor, it was terribly quiet. Needed a little bit of, and I couldn't handle watching CNBC all day long. That was just too much too. All right. Yeah, oil is having its, run like it always does with these kind of situations. They like jacking up the prices there. So it'll come back as soon as everything calms down a little bit. This is their opportunity to make up for oil prices being $40 a barrel. And they went up there, took that area, and came flying back down. I always do that to you. I try to stay short, but then they stop you out, and then they do what they're supposed to do, right? The market's job, remember, is always to get you out of a good trade. That's the market's job. And it does a pretty good job of doing that. Again, coming down here to blue band there around the 25 area. Our pivot here is at 28. If you're a pivot player, a blue band player, you're kind of in the area here. Again, he is starting his Q&A, so this is what could be foretelling, what's going on here. You get these quick moves in a second, right? So be careful. This is what we try to stay away from as far as trading is concerned. If you made money off of our levels this morning, a couple of them, then kind of just, it's fine. You can see here what's going to happen here with this, when he starts talking. We got a 30-point S&P move in 4.5 minutes. That's normal. That's just normal. So Fed day has begun in a beautiful way. So again, if you are up, happy with it, I would suggest not trading. I know it's kind of goofy for me to say. I said it 2 days in a row. You can handle the volatility, that's great. But this is Fed day. They just this is Fed day. I hate Fed days. I can honestly tell you, I could probably have bought a small yacht with the amount of money that I've lost on Fed days. So I'm trying to save you. It just doesn't seem like I've always waited to trade the Fed stuff too, and I'm like, wow. I go, this is really what I waited for, to lose money. So I'm just trying to help you out here by telling you not to trade Fed stuff. No, some people like it though. So it was never my cup of tea. I'll tell you that much. I hate tea anyway. All right. Well, again, we are coming down here to a 17 area, you can see how easily it held the pivot. Did not. How easily it held the blue band. Did not. So if you're trading, just keep your stops in place and understand that this is Fed day. You probably will have opportunities. The question is, do you even want to take them? Yeah, it's great volatility when it goes your way. But again, kind of like I was talking about yesterday, when you have fundamentals going up against the technicals, the fundamentals at least initially win. And when you have geopolitical situations going up against the technicals, the geopolitical situations usually win. Okay, so we trade off of technicals. We're not, so when we know that there's a geopolitical situation and or a fundamental situation, the war and or Fed talking or Fed releasing its decision on interest rates, those are going to overtake the technicals, and you have to be very careful there when you're trading. Now, 95% of the time, the technicals are going to work, so you have to know when that 5% is, so that you either can understand, expand your stops for those situations, and or not trade at all, because remember, that is an alternative. So just putting it out there. All right, you can see here, kind of just chopping around, coming back up here to our pivot area. Again, it depends how aggressive you want to be if you're going to be taking any of these opportunities. All right, again, Powell's talking, so it's going to create some craziness. All right, market continues to be a little bit weak on the heels of Powell's conversations with the Senate. That's what's going on right now. It's going to be going on most of the morning. So again, if you made a little bit of money this morning, that's great. Otherwise, you got to understand that there's some volatility here that's in the market, and you're going to have to trade that volatility if you want to, or not trade at all. That is an alternative. All right, kind of just hanging here on these lows. They got down to 18 and 1875. So if you're trading the 17, I would not be very, very. It's not. It's a very if situation right now, just because we stopped here at 1875. If you're more risk averse, especially with what's going on, I'd probably look at the '07 area instead. Definitely the 17 area, because we stopped here at 1875, is definitely tenuous and not as strong as it was just a little bit ago. All right, we're kind of bouncing around the pivot area here, staying a little bit weak. So we'll see where it wants to go. Again, the Fed is, Powell is talking in front of this, I think it's the House committee today and the Senate tomorrow, or vice versa. It doesn't really matter. They're going to ask him a lot of questions. I'll be very, very careful and mindful of trading this stuff with Fed speak, the man speaking, not just the Fed speak. He's going to be asked a lot of questions that really, I don't even know if we know some of the answers to these questions. He might not know the answer to the questions, but he's got to answer a question. And market bounces off of the 1875 area. Here we had 17. So unfortunately, kind of then bounce off here. So the 17 is definitely not a doable level anymore. Again, these levels are there to help, to guide, but then if you look at the chat box here, there they are for you. But you have to tweak them according to the price action, and this is a situation where you have to consider, the 17 area because of the price action just prior to that, not as strong as it was just a few minutes ago. So keep that in mind if you are trading that level. Again, we've gone through the 41 and 49 areas. So if you're going to retake them, they're not as strong as they were. I mean, I wouldn't be using them. Yeah, you can see here how choppy it is. Got up to like 35 area and then bounced right back down here 10 points and just bouncing around there. Very, very choppy. And this is the kind of trade that you kind of expect with Powell talking in front of committee. You're going to get this choppiness all day long. Very tough to trade, very tough to find an area where you would like to think to get long or short, as the market is very fluid. It kind of does its own thing at whatever level it wants. The areas that we have, again, remember I said that the fundamentals are there, but sometimes they overtake the technicals, and this is a big fundamental overtaking the technicals today, right? Him talking is obviously a big deal. My voice exudes confidence. I wonder where it's source of it. Well, I mean, if I'm going to put on a trade, I better have some confidence in putting on the trade. Otherwise, I shouldn't be trading. If I believe in what I do, then I'm going to, uh, you know, I do have that confidence because of that reason. So, am I going? Is it going to, or is every trade going to work out correctly? No, but I also know that my next opportunity should be profitable, and obviously, there's going to be days where unfortunately, I've been around a long time, but anything I do all day is not going to be profitable. But you just got to take that day and move on. So I guess it's because I've been doing this for a long time, and I've got confidence in the levels that we put out and what we do, and also the hard part for everyone, I think, as traders, including myself, is the discipline to know when to either stop, not trade, or to understand when you should turn the machines off. Right? It's a very hard concept for most people to understand. So that's what we try to do here with our education courses: give you confidence in understanding why the levels work, and then how you could take advantage of them based on the fact that you see them work, you understand why they work, and you go forward trading those levels because you have that confidence in putting those trades on. So I don't know if that gives you an answer, but it's I guess I've been doing this a long time, so that I I just kind of take each trade as it comes. I'm not going to get too excited about if I miss a trade or if I, you know, even when I don't listen to myself and do the wrong thing, I have to understand that I'm going to do that once in a while, but you have to exit and then be smarter next time. Hopefully learn from your mistake. So, all right, you can see here how they're just doing the same thing in reverse. They had a 30.5-minute bar and going down, and now they have a 35-minute, this 35-point bar going up. Not a surprise as far as F days are concerned. This is why it's very almost as difficult as it can be to trade these kind of days. Okay, I'm being honest here. What works on one day, a normal day, it is not going to be working today. And thank God we have more normal days than not. Okay. So, I mean, the levels, you could try the levels. Remember what I said about the levels, the technicals, when there is fundamental or geopolitical situations, they kind of run over them. So keep that in mind if you're going to be trading this stuff. Personally, I'm not trading this stuff because of just what you just saw right there. And what you saw prior to that, like 10, 15 minutes ago, when the market broke 20, 30 points. So, not one for not trading. They definitely not the person to tell not to trade. That's not in my DNA. But I also like money, and I also like keeping it. I'd rather lose money on days when I'm wrong about levels and the market's going to take me out of them than lose money today on a day that there's a Fed day going on and this and that. So that is my take on what's happening here. Am I surprised that this is absolutely not? This is not. This is not. Definitely not. Surprising me that this volatility is going on. Right. So you'd be guessing here. If you're going to take one position or the other. It is what it is. he's going to be talking today. He's going to be talking tomorrow. He's going to either a House panel today and then a Senate panel tomorrow, and then then we're going to be on Friday's unemployment. So we got a full week of volatility. We can trade Friday's unemployment, but him chit-chatting away and while we're trading, close to impossible to be able to figure out what he's going to say next and how people are going to perceive his statements or comments. Don left early today. It tells you something. So, and you know what? We are also going to leave early. We're going to stay on for another 15, 20 minutes, and then we'll call it and just like I said, I can't, you have to just trade this with a grain of salt today because of what's going on in the background with the Fed and with Powell talking, especially. There's definitely a lot of unknowns as to how he's going to manage all this stuff, right? Look at the bond market now going a little bit nuts too. So definitely some craziness that's going to be going on there. Not surprising. Again, if anybody has any questions, please feel free to ask in the chat. We have no problems answering them. Very, very choppy here. My bonds rotating to the downside here. That means S&P is going to rally. I don't know. They did have a flight to quality going on last couple days because of the Russia-Ukraine situation. They're giving up some of that. Still, the bond market, the yields are pretty low. No, the ADP number, they used to have a little bit better correlation with the non-farm payrolls number, but unfortunately, they've been off a lot. And that could also be because of reporting. A lot of people remember they attributed last month's miss to reporting misses because people were with Omicron, I should say. They were not at work, couldn't get the information they needed, so they put in some numbers that were not 100% correct, or maybe not exactly what they should have been. Who knows? So we'll see what happens. I don't even think this month is going to even be a really good number either, because we're still on the tail end of Omicron last month. Remember, when you give the number comes out in March, it's April's, it's February's number. In February, for most of February, we're dealing with, at least the beginning part of February, we're dealing with the Omicron thing. So we'll see what happens. Yeah, but it's hard to draw a correlation between the ADP number and the non-farm payrolls. All right, market continues to, I mean, after it broke 15 points, it starts continuing this rally here. Again, if you're going to trade the levels are good, but remember, we're in the midst of this goofiness, so trade it with a grain of salt. Keep your stops in place. We got 61 up here, the next level of resistance that we have. Understand what is happening, so don't be surprised if you have to just to get stopped out. And there is also, like I said, a risk reward situation here where you're going to get those quick moves. Hopefully they go your way and not the other way. But again, the fundamentals here are definitely taking over, at least for the time being, because of what's happening at the moment, which is Powell speaking. So we're coming up here to the 60 area. Again, if you're going to take it, be 61, I should say. Be very cautious. You can see how slippery it is. Not for the faint of heart, that's for sure. Okay, you got up to 59 and a half and plunged down to 53 and change. So you are definitely going to have a risk reward situation. As quickly as you can make the money, as quickly you can lose the money on a stop, right? That's for sure. All right, just kind of bouncing around up here on these highs. Again, be careful there of the 61. We got up to 59 and a half up here. So again, the same thing like the downside support there at 17. We got down to 18 and a half. Looks like we're missing it by just that much. All right, market kind of turning over here a little bit. Like I said, we had 61, got up to 9.5 up there, and then rotating back down here a little bit. So again, just like the downside support there, it was tenuous. Right now, the 61 is definitely tenuous up here. So again, this is where this is where you make adjustments to the levels because of the price action. If you're more risk averse, you're going to cancel the level together and wait for the next level on the upside. And if you don't think we're going to get it the way these things are moving, you're going to get it. So just be patient. I want to tell you there's like a little support here, a little support there, but this thing is just moving way too quick and kind of going through a lot of things very fast. So, and again, I would venture to say that because Powell's talking in the background, it's very, very, you got to be very, very picky in your trades, or not even trade, because of because he's talking in the background, and because he's going to create some volatility, as you can see. So if you like money, just saying, if you like money, then it's gonna not trade that much, right? I mean, just saying. Just saying.
Hey, quick programming note. We had a couple questions about signing up for the service on a daily basis. This is Trade Along Live with Sol. We start here at 9 a.m. We go to 12 noon with the body of the trading happening between 9:30 and 11:30. Right now it's 10:49. It's a station identification break. I'll send out an opportunity for everybody to get a opportunity to sign up for the service on a daily basis. So if you're coming in as a guest, make sure you read this. This is a great opportunity for you. Emma, let me know what you're doing. Bruce, hey, Dean, how are you? Edward, Frank, Glenn, Joe, let us know what you're doing. KG, Kenneth, how are you? Patrick C, hey, Philip, Richard A, Roop, Shepstone, Timothy, Zahul, nice commentary before. Appreciate it, Pat. Appreciate it. I'll be in the background if anybody needs me. Take advantage of it. We've got a few people that we exited today because they were non-responsive. So don't be non-responsive. Don't be a piker. Make sure you sign up and check your chat area. Thank you.